The discovery of Bitcoin in January 2009 ultimately created a new economic reality: unprintable money. It's a novel tool for savings, trade, and economic calculation. If you ignore it and continue saving in inferior assets at high valuations, your economic competitors will outcompete you. If you choose to ignore Bitcoin, you should expect similar consequences to people who may have ignored the discovery of gunpowder. When civilizations first discovered gunpowder, adopting it was not optional. It was not a new consumer app when it comes to war and defending land and citizens. If you failed to adopt gunpowder, or you simply ignored it, your enemies adopted it and physically conquered you. Bitcoin is no less optional than gunpowder. Bows and arrows will not protect you. Gunpowder is objectively better than bows and arrows. Bitcoin is objectively better than gold or the US dollar. Failing to recognize this doesn't make it less effective. It just means you will lose and others will win. Like gunpowder, Bitcoin has objective properties that one must contend with. Gunpowder is highly combustible, storable, energy dense, stable under normal conditions, but also sensitive to ignition. Bitcoin is immutably scarce, portable, durable, divisible, and fungible. We're living through hyper-Bitcoinization, and you can already choose to start denominating your wealth in Bitcoin, objectively superior money. Now, the core of this argument is not just speculation that we'll eventually discover more efficient ways to mine gold, build homes, or manufacture and sell GPUs, and we won't be able to mine more than 21 million Bitcoin, although all of these are likely. It's that unlike savers of Bitcoin, owners of traditional assets must face the possibility that their supply will continue to increase in the future, or creative destruction will devalue the present value of their future cash flows. As these traditional asset holders begin to recognize this and begin to understand that Bitcoin is a superior alternative because it certainly cannot be debased and touts the necessary properties of good money, then the price of these assets relative to Bitcoin could begin to fall significantly even before any massive supply increase or creative destruction occurs. And this would just occur from a few holders of the traditional assets cashing out for Bitcoin. Markets are forward-looking. If Bitcoin is going to be more resistant to debasement compared to gold, real estate, or other assets, even if it occurs very slowly, then you should still cash out to Bitcoin sooner rather than later. That's why Bitcoin has a compound annual growth rate of 130% over the last 13 years. The world is rushing out of inferior assets and funneling capital into the apex form of property. Bitcoin may be the only asset that can stop the free market from inevitably melting your wealth. Thanks for watching, everyone, and see you next time.